Morning, Market Chameleons. Happy Monday morning. And there comes my favorite chameleon, Dimitri Pargamonic. How you doing, Dima?
Hey, Will, how's it going?
Great. So we want to get right to the disclaimer before we get started.
Yep. So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
Excellent. All right. What do we have on tap for this morning?
So I think we'll continue on the question and answer, customer question and answer day. It's been pretty good. I think we've been getting very good questions. And the way it works is, if you guys are logging in for the first time, you could use the YouTube chat to put a question in there. It could be, anything regarding maybe a Market Chameleon tool, statistics or data that you've seen, maybe certain trades that you've experienced that maybe something was unusual or you weren't expecting. Maybe even a particular setup that you're looking at right now. If you have a question, it's a good time, to ask that question, because the idea is that, other people in the community may benefit from it. Maybe they didn't see something before, that they haven't experienced yet. It's a chance for them to kind of get exposure to that, before they run into a similar situation, or maybe they have a, similar question. So, the idea is, hopefully it helps you and other people in the community. So you could type in your question in the chat. Another way to do it is Will's going to put in a link in that chat box to YouTube. If you click on that link, that will take you over to Zoom. When you're in Zoom, you could raise your hand. This signals to Will that you want to turn on your audio. Will let you in. You don't have to turn on your video camera, but if you turn on your audio, we'll hear the question. This is, I think, a much better way to ask the question, because you could guide us to where you're looking, tell us what the surrounding circumstances are. We could, ask you other questions, what you're seeing, what led you to the question. It's a better way to kind of focus in on that question. So while we're waiting for questions to queue up, we'll just quickly take a look at the pre-market report, and then if we don't hear any questions, I'll go to some of my backup questions that I've been writing down, coming in through either the email or through, previous shows or through the chat. Sound
Awesome.
good? All right.
Yeah.
So let's start with the pre-market report. These are stocks that are trading in the pre-market hours. We have the most active stocks, the biggest percentage gainers, biggest percentage decliners. I'm going to come down here real quick, see that 138 stocks made our percentage gainers list, 50 on the percentage decliners list. So from that perspective, favors more of a bullish bias at the open. Let's take a look at the higher market cap stocks, see if we see a similar situation there. So I'm going to take the market cap filter here, and I'm going to select market cap stocks 20 billion or higher. So we see here 34 made the percentage gainers list, 8 on the percentage decliners list. So from that perspective, looks like a more bullish bias at the open. The lists aren't huge. It's not a very big list. We don't have hundreds of them in there, but nevertheless, a little bit more bullish bias at the open based on this. So I could move away now from the pre-market report, Will, and if you don't have any questions yet, maybe I'll just, default to some of the remaining questions, that I had from previous shows.
Yeah, default. There's no questions popping up yet.
Okay, so I'll go over maybe some quick ones that I wrote down. One of them has to do kind of with portfolio management and risk management, and the questions typically come in. They'll sound like, I have a small account, so I'm going to use stop loss orders, right? So whatever the account is, I'm just going to make up a number, $20,000. I'm going to out of that $20,000, take 10,000 or 15,000, bet on an option. And then if it goes down 50%, you use a stop loss order. Okay. So that's one type of question. The other question, the other type, that I'm hearing is, well, when do you exit a position? Do you wait for 50% gain, 75% gain, or do you exit at a 25% loss, 50% loss? So when we talk, the general rule, and it's very important, I think too many people, break this rule. Okay. And I kind of repeat this because even when I repeat it, I think people still do, but when the general rule is you shouldn't risk when you're trading, right? You're not investing, you're trading. You shouldn't risk more than 1% of your capital on any given trade. Okay, so you shouldn't be doing that. When you're going above that, you're starting to enter gambling, right? If you're doing 50%, 25% of your portfolio, you're gambling. And when you say, well, I use stop loss orders, it doesn't matter. Okay, you're still gambling. It's not equivalent. Okay, it's not equivalent to risk 1% of your portfolio on a given trade, or to risk 50% and use a stop loss order. It's not equivalent. Okay, so you're still really gambling. It's not.
Was it gambling or just taking a lot of risk?
When you take on a lot of risk like that, you're not playing for statistical edge, right? You have to have a lot of assurance, right? That this is the, even if you have a casino, right? If you said you have a casino with a statistical edge, right? If they had a statistical edge, but they were able, and you have a roulette, right? You have red and black and then a green, right? So if a casino just said, well, we're only going to take one bet a day, right? For $10 million or whatever, an unlimited amount, right? That the casino maybe not afford. They're already, getting into that category where they're going to eventually probably blow out, right? Even if you have a small statistical edge, because you're just you're not playing the laws of large numbers, right? You're just kind of just letting it roll, all on this one bet. And I think that you're starting then to go into gamble. And just to give you like an idea of risk management, if you have a hedge fund or a big market making firm, they're going to have traders. They have a department traders. They have a department, that does research that supports the traders. They also have a department for risk management. The traders could have their risk management call them up and say, hey, you got too much, exposure, Vega exposure, you got to take some off, or you got too much, downside market risk. You got to buy some puts back, or you got to, and not only their own risk management department, which they have, they might get a call from their clearing firm telling them you got to take, you got to reduce your risk. They might even get a call from a regulator telling them you got to. So when you're managing your risk right now, you're alone out there, right? It is up to you to manage your risk. You're responsible for that. Nobody else but you, right, are responsible for it. And when you get into that, I'm buying an option 50% of it, in my opinion, you're already starting to gamble. Like you're not playing the laws of large numbers anymore. You're not really playing for statistical edge unless it's such an unbelievable opportunity where you're like, well, I'm willing just to take this, because I might never see this type of opportunity again, and you're that sure, maybe then, but using stop loss is not the same thing as you need to manage that risk before you even enter that trade, right? That's when you're like, it shouldn't be above this amount. And I think people get into trouble when they don't do that, because think about it, your variance in your portfolio is going to be much higher than the market, right? So your variance right now is, the market moves down, up 1%, maybe 0.5%. The variance in your portfolio is like 20, 30% probably, right? So how much more are you expecting to make above the market, to justify that variance, right, in their portfolio? Like, does it make sense to you, right? Why am I taking on so much portfolio variance? Where's my reward? And that's got to be, you that has to be ingrained, because I think that too much risk is really, a thing that I feel like people are doing, taking on way too much risk, with these, and not kind of sticking. What is the rule of thumb? What, 1%?
What, 1 to 2% is typically what they say.
Yeah, I would say closer to
Someone's actually asking, there's an interesting piece on the Zoom. John was asking, how do you manage if you have 1% in? Obviously, if your portfolio is fully invested, there are a lot of positions on, right? So he was asking that, and Jake was just mentioning that there's some ideas in the that have been brought up in the Discord about managing large positions, not one large position, but multiple trades, right?
Right, and that's another thing. You have to have the ability to manage those types of trades. You need, there's softwares out there. We don't see that. We don't get involved with that. We don't see your positions. We don't do any. That's with your broker. But there are softwares out there to help you manage it. And the other assumption is, well, that means I have to have 100 trades or whatever. No, you probably you always need something in reserve, right, to do trades the next day or the next day. So you're rolling trades. So that doesn't mean that 100% of your capital should be fully invested at all times. That's not how it works. You should, and by the way, when it's 1% of your portfolio, it unlocks you to look for more good trades, right? As a trader, you're always looking for better opportunities, better trades, that because the markets are dynamic, right? And you're moving. Sometimes you might even need to move out of one trade into a different trade, but you're always looking. So you can't be handcuffed to a position, married to a position that you need something to happen for you to move forward. That makes no sense, right? That if you find yourself looking and staring at a position, hoping it goes up, or you're stuck, or I can't even trade anymore, or I'm in trouble, or you're doing it wrong, right? Doesn't that make sense to you that you're doing it wrong? Like, does that make sense to you that a Goldman Sachs trader or Citadel trader, would they be doing something like that? You already took that, your predefined risk. Your variance should not be big as a percentage of your overall portfolio, that you have the ability to think and continue to look for better and better opportunities. Okay. And that's important. The other thing I think that, people, and tell me if we have questions, because I could just keep,
Yeah, I will.
Yeah. I think that the other thing with the risk man, well, this is another one. It's like, where do I exit? And people believe that the exit strategy should be that the profit and loss of their position should dictate the exit strategy. And that's not really true. That's not necessarily true, because it should be, what is the situation? Should you be getting out? Should you be reducing, or should you be adding more? And you need to be able to evaluate that. So let's just say you got into a stock. I'll give you a simple example. Let's say you bought a stock because you think that this stock is great, but you bought it because it pays a great dividend, right? And you believe, like, hey, this is a good carry trade. It pays a 4.5% dividend, and I think that dividend is going to grow, right? So you think that over time the dividend is going to grow, and that's why you got into it. So you buy it today, but whatever years from now, it's going to be even much higher, and you're willing to wait. And let's say that you bought the stock, and then maybe you got lucky, and then right afterwards, the company decided, hey, our earnings are good. We feel really confident. We raised our dividend from 4.5% to 5.5%. Right now, it's 5.5% dividend, and the stock increases. Well, all right, you did make a profit on the stock, but something changed, right? It actually, when the news was more favorable, and you may not want to sell it anymore, right? You may still want to sit on it because it's going the way, maybe even better than you expected. Maybe you even want to add to that position. You don't know, but just because you made a profit on it doesn't, that shouldn't be the deciding factor, because what are the circumstances? Now, maybe you have the same stock. Let's say you have the same stock and an analyst upgraded it and it's up 10%. Well, you might look at it and say, yeah, but you know what? The analysts, they didn't really give me a reason why they upgrade. I don't see the full analysis there. So I don't know if I agree or disagree. They just did an upgrade and raised their target price. And, maybe what is this one analyst? There are a lot of opinions out there, right? There are a lot of people trading it. And maybe that is a good way to exit, because maybe I'll take my 10% and see what happens. So you might look at that 10% as a gift, because the company didn't announce anything. There's not really any fundamental reason, because maybe somebody's opinion, but all right, I mean, how much do there are a lot of analysts out there, right? So that might be an opportunity to say, I'll take some off the table, or I'll take my 10% as a gift, and then I'll see what happens, because, I don't see any other reason. So again, it's when you're trading small, you have that you should always have that flexibility, and you should be evaluating it at every level. What are the circumstances? And sometimes the circumstances could be that I see a better opportunity somewhere else. So I'm gonna just take, my input. I'm gonna get out of this and I'm gonna get into that, because the opportunity all of a sudden presents, there's a better opportunity somewhere else. It could be even for that reason. But exit, it should be evaluated based on what are the circumstances, what changed. Is this a good price to get out? Is this bad? Do I see different opportunity? But you shouldn't, there's going to be volatility in your positions. Volatility shouldn't be, you should be trading at a risk level that beforehand expecting volatility, so it doesn't shake you out. But, and again, this is my opinion. You could talk to your broker, right? Or you could do whatever you want, but this is what I see.
Well, they're varying opinions, right? Like, I mean, I know a lot of our community also are active, followers of Tasty Trade and Sosnoff and that group. And they try to set people up with, get out at whatever it is, a 25% loss, take, 50% wins. They try to, set guide rules for people to follow for whatever reason. That's how they try to manage their portfolio.
I mean, that's, I don't know what their guidelines is. Just kind of step back from it and say, does that make common sense? Have you guys noticed Warren Buffett, right? One of the best traders. He invests in a lot of stock, right? He has a big portfolio. But have you guys ever noticed that even though he's always invested and he's always buying stock, when the market sells off big time, and we've had lots of money panics, Warren Buffett never gets taken out. He's always buying more at those levels, right? He's always going in there, and that's when he's betting the biggest.
Not only, right? Yeah, that's when he gets the best deals.
Yeah, exactly. Is that when he's begging him to? Yeah, is he selling it there? Like, does that make sense to be selling it there, or does it make sense to be actually buying them more at discounts? Right? Does it make would you be wanting to be forced to be selling when things might be looking at the best opportunities, at the best discounts, where there's a big dislocation in asset, or do you want to be the one selling it? Right? That what makes sense to you? Right? Those people who are forced to liquidate on those money panics, if that's what's happening to you, if you're being forced to liquidate, you're setting up the conditions for bigger opportunities for those other people who are managing their portfolios much better. Okay, so keep that in mind. And even though I think some people think that they have to, hit it big every day or hit home runs and grand slams, but that's not how it works, because the opportunities over time, they're gonna appear in the most unexpected times, right? When something is unexpected, you don't know when it's going to come, but you need to be ready for it, right? Because that's really, while you're in a game, to be ready for when those opportunities appear. So, that's kind of like, the risk management, I think, and look, our website has nothing, you manage your own risk any way you want, right? We don't really care because we don't get into that. That's with your broker, but it's just a common question that I see a lot of people struggling with. And I think that they just break that kind of rule. And then,
well, we did have one question, and this kind of fits into what you've been talking about, but they're asking about the trade idea cards, and he's asking if they're, and unfortunately he's popped out, but he was asking, are these trade ideas for day trading and swing trading? And he's probably not clicked on the cards because it describes exactly what the trades are, right?
Right. Right. And, I don't even like when people say that day trading and swing trader. When, there's certain things that people say, right? There are certain things that people say and use like terminologies and words that they're not read, right? That like when people say that their perception of what trading is so far away from what it actually is that there's almost nothing you could help them with, right? When they're swing trading, or find me an option to swing trade, it's kind of I feel like it would be difficult for me to even answer that question because I feel like they're just too far away from learning and experience, and they need to. Sometimes people need to, they need to get their gamble out. They need to get their they have it in them. They want to swing trade, they want to day trade, they just want it fast and easy. They think it's going to be like, what they're going to do is chase prices. That's all they're going to do. They're going to chase prices and learn their lesson the hard way.
Wait, you're telling me you can't follow someone live on YouTube and follow their trades?
That's no, absolutely not. That's never happened. That's why it's so weird that people think that you could do that, because there's never been, have you ever heard of a billionaire or millionaire claim that that's how this is how you do it? But people believe in. Why? Because remember, the first thing people think about that are just entering this for the very first time is, one, they're motivated by, they think is going to be fast and easy money. That's what they think. And they're going to learn the market's going to teach them a lesson. I don't have to teach them. The market will teach them that lesson, right? That's not the case. And they'll look for either like follow my trade, or they're going to say like, what are these 3 easy steps, right? Like 3 easy steps to 3, that's what they're looking for, the fast and easy route. And it's not going to be that way. But you're not going to be able to convince that they're going to have to do it their own way. And that's going to be the majority of the people. And by the way, statistics show that that's going to always exist, right? That will always exist. There will always be people like that. And that's the majority of people getting in there, right? That in the beginning, they look for the fast and easy. They think there's like some tricks or some like secret signal out there or something that you're going to follow. And it's not like that. I think that it takes knowledge, experience, work, there's a cost to it. That's how eventually become successful. Like think about it, like, maybe I want to be a good guitar player or a great tennis player, but that doesn't mean if I take a racket and start trying to whack the balls, I'm a star tennis player, here, somebody gave me an example. I was talking to a customer, like Tiger Woods makes it look easy, right? He on TV, like, well, what's the big, you take a club and you hit the ball, but nobody sees how long he's been working at, and besides having like a natural talent, how much work he's been putting in. Like, I think you could see videos of Tiger Woods when he was like, I don't know, 5 years old or something, right? That's how. So I think maybe the difference between here, and other, other professions that take skill is that here you could get lucky, right? It's a game of chance. And because it's a game of chance, people, there's luck involved, right? That people could go in or buy stock, it goes up and they think they're right and they're smart and that they did it, right? That's how it feels like. I did it. I was smart. I knew. I hear people, I knew it. They would say, I knew it. I told you so, like that. When there's actually no research behind any of, if you ask them, well, is the reason or research or thesis behind it, or, they can't explain it. So, that's why when somebody says like swing trader, day trader, it's like, I know like there's nothing here for you, right? We will not be able to help you. If that's, if you're, what you're trying to do is that's how you identify yourself as a swing day trader, like you're wasting your time being on our website, and we're asking questions because I'd rather honestly like kind of weed that portion out, because it's also not, and really it's because it's frustrating because it will take time and resources away from other things, so I'd rather just be like, yeah, like there are other websites maybe that could help you. We would.
Yeah, it's actually interesting. We had a new chameleon pop in, Zachary, and he says most guys my age talk to me about crypto, GME, AMC, and they want overnight riches. It may work for a little until they get smoked. But it's, and Zachary, it's smart. He's young. He's obviously doing, the research, the studying, taking your time. It takes time, energy, learning from your losses.
Exactly. It takes time. When people, if some people saw, my methodology, they would think I'm crazy. First of all, there's no way to follow somebody's trades because you're reacting in real time to information coming in, to your position, to something that you might even think like, I got to get out of here because there's a better opportunity over there, or I need to do this because there's a hedge there, so you're doing things, and you just learn to, and when you're doing it, when you're trading and you're into it, you can't be explaining to other people what you're doing as you're doing it. It's like asking a quarterback to, well, slow down. You have 5 seconds to react, but I want you to slow down and to explain to me everything that's going on because it's what you're seeing, what he's seeing at the time he's reacting to, right? And he's got 5 seconds to let go of that ball, right? And even though there's a game plan, now he's reacting to the information on the field. And that's kind of how you're doing it all day long. Now, another thing is like people think win rate, but win rate, I'll tell you this, that when you're trading, a lot of it is experimental where you're trying to probe the markets where you think this, this makes sense. This is where I think it's, I should be. And you're probing it with one lots or very minimal to validate your thesis. Anybody ever see like card people who count cards? People who count cards will sit there and bet very low, knowing that they're just kind of giving that money away in the beginning, right? While they're counting cards until it becomes meaningful and they know when to start raising their bets, right? So what they're doing is they're sitting, as soon as they sit down, they know that right now, I'm not sure, the cards that are coming out, I have no idea, the edge is on the dealer, right? So the top of the deck, the edges for the dealer, they see my cards, I don't see theirs, and they start betting the minimum amount at the table, right? Because what you're doing is you're getting information, you're paying for information until you finally know, now I know when to raise now I see the opportunities, now I know when to increase my wager, right? So actually people who do that, the edge, right? It's not based on winning more. It's based on they're using that information to know when there's an opportunity, when do I increase my bet? That's trading. That's how you're doing your research. Almost anybody who comes up with, a trading strategy or what will, unless they've already recognized it from beforehand, or they, have a lot of information, what they will do is start testing that thesis, and move it, you have it in sample, then when you move out of sample, you're just probing it and seeing how do things work. This is my assumption. This is what I think is going to happen. How did it work out? Oh, I missed this. I need to tweak that. Or, my thesis is wrong. I'm going back to the drawing board. But that's kind of how trading works. You're not going to get at, if you think you're going to start winning right out of the gate, then you would be the first. If whoever gets in there and starts winning out of the gate, all the time and just goes straight up, that would be, I don't know, a first in history, right? So it's kind of like that, it's learning. If you learn how to play basketball, you're not going to, every time you shoot, it's not going to go in a hoop. And a success in basketball isn't being 100%, 100% success, whatever it is, it could be like 40%, 50%, right? That's the benchmarks that you have to reach. So kind of just wanted to, because I wrote it down, and I think things like that come up very often. It has nothing to, to do with looking for edge, or research, but even with the right tools, even with the, with the right research, when you're not managing your portfolio and risk, it could get out of control, and you're just going to hurt yourself, right, in the process, because you handcuffed yourself, you married yourself into this position you put on, and then you're just sitting there and just watching. So you're not trading. Watching a position, hoping it goes into your favor, is not trading, right? That's already just, you're just rooting for something to happen. You're at that point.
All great comments and points, D. We're up against the bell, my friend. Great job, as always.
Everyone, yep. Thanks for joining. Hope everyone stays safe out there. Have a good trading day, and hope to see you guys tomorrow.
Yep, I put in the link. We have a webinar with Interactive Brokers tomorrow at 2. If you register for it, you'll also get an email. You can watch it on your convenience. You don't have to be there live at 2, but we got that going on tomorrow. We'll see you tomorrow morning for our pre-market show. Thanks, Dee.